Good evening, guys. So today is 9th May, day 2 of our intraday trading with BankNifty with a new indicator, the daily average. So what we found today was BankNifty opened up slightly higher than its previous day close, but as per our rule, what we will do is we will only buy call option. We look for buying call options. However, market stayed for a lot of time in a smaller given range, and I found one more word indicator to support our trading pattern, which says to check or to ensure what is BankNifty actually doing in the open interest area. Let's quickly see the new one. Okay. So what happened was when market opened, almost put and calls were similar in a similar range. However, as the market rose, we found that the puts were written. Yes. So when the market opened, almost the puts and calls both were same. But once the market opened up, we found that the puts were lesser and calls started rising. The same continued for almost most of the day. So whenever calls are written, it says market would trend down. And whenever we see puts are written more than the calls, it says market will go green or bullish. But this indicator was indicating us a bearish trend for most of the day, and our pivot indicator was indicating a bullish trend. So both of these were conflicting with each other. What should we do in this scenario? Yes, we can of course trade, but trade with caution is the important thing today. So as per our indicator, what we wait for is check if there is any closing above a green line. So there was no candle closing above the green line until 10:13, 10:14. So at 10:14, this is the red candle which opened up above the green line, and we would have bought a call option somewhere around 43,418 and sold it at around 43,460. This is pretty small move, which is just like 15 points or 20 point move. But what I saw today was the market was eating premiums. So this is a great way to identify if market is going to eat our premiums, which says if market is trending up and the falls are returned higher and higher, it means market is eating up our premium. So just try to avoid any of these trades, which I did today. I took one small trade, put some 100 rupees profit, and came out because I just saw, I came up with this and found out, okay, it's a no trade day for today, for us today. I could have achieved one trade here, which was 43,454 to around 43,530, which is again 70-80 coins. More in BankNifty, but I didn't take this as I had my other things. For the whole day, it was 10 big in about our lines, and at the day end, what we could see is it just crashed out, well, means up below. So, what this say tells us, if markets open in green or above our pivot range, and the option writing is conflicting, we should avoid these days for trading. We could have what puts here based on this data, but we don't know if market could be fooling us because this is a delayed data. This is delayed for around 3 to 5 minutes, and in 3 to 5 minutes, option price erode like hell on 3 waiting days. So now we just have added one more rule to our rule book. First is check where the price is. If it is above the pivot range, we would buy calls. Only when it crosses a green line. If it is below pivot, we would buy puts. Only once it crosses the red line. Third thing now what we learned today is, if the put call ratio or the puts are written more than calls, we would buy call. If the calls are written more than put, we would buy put. Thank you for today. That's it from my end. Have a safe day and have a happy trading tomorrow. Bye-bye.